Assalamualaikum and hi. Today, Group 3 will be presenting comprehensive case 1 for the course BKRK 3053 Financial Accounting and Reporting 5. Our topic focuses on Malaysia Financial Reporting Standard 13 Fair Value Measurement. Throughout this presentation, we will explain the key principle of MRS 13, its application, the fair value hierarchy, and how it used in practice. We hope this presentation gives a clear understanding of how fair value plays an important role in financial reporting. For this project, our group is made up of 5 members. First, we have Tan Ayi as the team leader. Second, Nafisa Idrina. Next, Nur Hanani. Then me, Muhammad Raif and Aisha. We collaborated closely to produce quality work presenting the details and analysis for comprehensive case 1. Before I start, I would like to introduce myself first. My name is Muhammad Raif bin Muhammad Rafi and my metric number is 300719. I will present about summary of MRS 13. On this slide, I will explain what MRS 13 is about. MRS 13 provides one consistent framework for measurement fair value for all types of assets and liabilities. It defines fair value as a market-based price, meaning it's based on what market participants would pay or receive, not what the company personally thinks the value is. For non-financial assets, the standard uses the highest and best use concept, which means the fair value should reflect the use that gives the asset the greatest value. MRS 13 also introduced a 3-level hierarchy of inputs. First, level 1 use quoted market price, which is the most reliable. Level 2 use observable inputs like market data, and level 3 relies on internal estimate when no market data exists. So the standard requires clear disclosure on valuation techniques and hierarchy levels so user can understand how reliable the measurements are. Next, I will explain about the theories. First, we have the normative accounting theory. This theory focuses on how accounting should be practiced. Under this theory, fair value is supported because it provides more relevant and useful information compared to historical costs. So, MRS 13 reflects this theory by giving market based on more realistic measurement of assets and liabilities. Second, we have the positive accounting theory. This theory looks at how companies actually behave in practice. Before MRS 13 existed, many companies were already using fair value in different ways. So the standard was developed to bring consistency and reduce the differences in how fair value was applied in practice. This is why positive accounting theory helps explain how MRS 13 aligns with real-world accounting behavior. Lastly, we have the regulatory theory. This theory focuses on protecting public interest and ensuring stability in financial markets. After 2008 global financial crisis, regulators realized that fair value reporting need to be more transparent and consistent. Therefore, MRS 13 was developed to improve clarity, transparency, and comparability in fair value reporting. This helps restore investor confidence and reduce information asymmetry. MRS 13 is important in promoting consistency, comparability, and confidence in financial reporting.
Assalamualaikum and hi, my name is Nur Hanani binti Muhammad Zikri and my matrix number is 300716. So next, I will explain the main parties involved in the development and formulation of MFRS 30. Basically, MFRS 30 was not developed by one organization only. Instead of multiple parties contribute to ensure the standard is conceptually strong, practical to apply and align with both global and Malaysian reporting environments. So this party include the IASB, the MESB, industry participants, academics and professional accounting body. So the first party is the International Accounting Standard Board or IASB. So basically, IASB is responsible for developing IFRS, including IFRS 30, which is the foundation of MFRS 30. So IFRS 30 was issued in 2011 and become effective in 2030. The goal was to create a consistent and transparent framework for fair value measurements across the world. IASB also performed a post-implementation review in 2017 and 2018. This review confirmed that the standard was working as intended, although some implementation challenges existed. Overall, IASB played a key global role in setting the main principle behind fair value measurements. The next party is the Malaysian Accounting Standard Board, or MASB. Basically, MASB issued MFRS 30 in November 2011, making it fully equivalent to IFRS 30. This ensures Malaysians follow international best practices. MASB also carried out exposure draft and public consultation. This was important to ensure the standard suits Malaysian legal system, economic condition, and industry needs. In short, MASB acted as the bridge between the global standards and Malaysian reporting environments. Next is industry participants also play an important role. These include accounting firms, valuation experts, auditors, and companies that apply fair value in their financial statements. They provide practical feedback during the exposure draft stage, helping MASB and IASB understand real-world challenges. The IASB review found that some parts, especially level 3 disclosure, were costly and time-consuming. However, industry feedback helped confirm that this disclosure still provide useful transparency for users of financial statements. Academic and researchers also contribute by studying the theoretical and practical impact of fair value measurements. Their research helped identify issues such as valuation reliability and investor reaction. Through their findings, academics help ensure that MFRS 30 is not only useful in practice but also supported by strong conceptual foundation. Last group is professional accounting bodies such as MIA and SCCA. These bodies help interpret the standard, provide technical feedback, and offering training to accountants. They make sure practitioners understand how to apply MFRS 30 correctly and consistently. Their role support the smooth adoption and implementation of fair value measurements in Malaysia.
My name is Tan An Yi, metric number 300635. So next I'm going to present on why MFRS 13 fair value measurement is best described as a principle-based accounting standard. So first of all, MFRS 13 provide a conceptual foundation for measuring fair value instead of prescribe the strict, detailed rules or formulas. So this approach emphasizes professional judgment, conceptual understanding, and also faithful representations of real economic conditions, which are all key characteristics of a principle-based standard. Next, the standard established a consistent framework for measuring fair value across various types of asset and liability. Fair value is defined as a price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. This definition itself highlights a principle-oriented foundation because it's focused on the objective, market-based measurement rather than a fixed calculation method. So moving on, MFRS 13 allows entities to select suitable valuation techniques such as market approach, income approach, or cost approach. So this depending on the nature of the asset or liability. This flexibility requires accountants to exercise professional judgment, making it highly adaptable to different situations and market conditions. Additionally, MFRS 13 introduced the concept of highest and best use for non-financial assets. This requires entities to consider how market participants will maximize the asset's value. It cannot be applied mechanically, and it requires thoughtful analysis and informed professional judgment. A rule-based standard, on the other hand, would likely specify fixed formula or predetermined assumptions, which may not reflect economic reality in complex or rapidly changing environments. In summary, MFRS 13 clearly demonstrates the qualities of principle-based accounting standard. It emphasizes on the market-based objective, flexibility in applying valuation technique, professional judgment, and relevance to economic conditions, which align closely with the IASB conceptual framework. As highlighted by ISB in 2018, principle-based standards aim to enhance faithful representations, relevance, and comparability, to all of which are strongly embedded in MFRS 13.
My name is Aisha binti Muhammad Fardi with the metric number of 300670, and I will be proceeding with the limitations of MFRS 13. Firstly, complex technical language. MFRS 13 uses technical and legalistic terms. Concepts such as highest and best use and most advantageous markets are often difficult to understand. Preparers without valuation expertise would struggle to interpret the standard. Among those who would find the standard difficult to understand are students, junior accountants, and SMEs. Secondly, we have lack of practical examples. The standard is principles-based with few examples or case studies. Users must translate general rules into specific valuation steps on their own, and those with limited valuation experience would find this challenging to apply. This is then proven in the IFRS post-implementation review, as it shows that users would want more guidance included in the standard. Next, we have high professional judgment required. Level 3 measurements require many assumptions due to the limited market data. Respondents struggle to decide whether markets are active or if inputs are significant. Different judgments would lead to different values for similar assets, resulting in inconsistency among these organizations. Another limitation would be measurement challenges. Fair value is hard to measure when there is no active markets. Preparers would have to rely on models using unobservable inputs, which would lead to higher estimation risks and lowers comparability across organizations. Market-based value also ignores entity-specific benefits. Lastly, we have extensive disclosure requirements. MFRS 13 requires detailed disclosures on methods, inputs, and assumptions. This increases workload and creates information overload. Some disclosures are too general, thus lack clarity and usefulness.
Hi, my name is Nafisa Iridina binti Muhammad Zaitu. My metric number 300782. Next, I will present the recommendations to overcome the limitations of MFRS 13. To overcome the limitations of MFRS 13, our team suggests a few practical improvements. First, by simplify the language of the standard, MASB should revise complex wording and provide plain English guidance, decision trees, and clear explanation for difficult terms like highest and best use, because many parts are too technical. Second, by provide more practical examples and industry guidance. Professional bodies such as MIA, MICPA, and ACCA should issue work examples, case study, and sample disclosure, especially for level 2 and level 3 valuations. Third, by strengthen training for accountants. More workshop and training should be provided on valuation techniques, use of inputs, and professional judgment to reduce inconsistency and applying the standard. Fourth, by improve access to reliable market data. Companies should use valuation database, benchmark reports, and external valuation expert to improve accuracy, especially when dealing with inactive markets. Okay, lastly, streamline disclosure requirements. MASB could offer clear guidance on materiality and introduce standardized templates to make disclosure shorter, clear, and easier to prepare. Okay, so these steps can help make MFRS 13 easier to apply, more consistent, and more useful for users of financial statements. For the reflective statement, through this case study, our team gained a clear understanding on the strength and weaknesses of MFRS 13. We learned that fair value measurement is not only technical, but also requires strong judgment, market knowledge, and proper disclosure. By analyzing the limitation and preparing recommendation, we develop better critical thinking, teamwork, and research skills. Overall, this assignment helped us appreciate how accounting standards work in practice and the importance of continuous learning in the accounting professions. Thank you.